Peter Eliades with you, Stock Market Cycles Update, Tuesday, February 4th. This is when the projection software gets to really be fun. It's fun all the time, but when things start to happen, you make some kind of top, you come down, you start going up again. What is going on? Are you going to go down further? Are you going to go up to new highs? We told you a couple of weeks ago that because we had reached the highest end of the S&P projection, and we had also entered all the other projections, the Dow and the New York Composite, nominal 40-week, the longer ones, the chances are pretty good that some kind of top was forming there. And indeed, look, as we said, this bar, one tiny poke above that maximum upside. But we also reserved the opinion and told you that that doesn't mean that it has to be a final high, because even though there are no longer-term projections at that time, we can begin to get what we call loop projections. That's just an expression that we made up, and we'll show you in a second where we got that expression from, the terminology for it. But I wanted to show you this chart to say, okay, here we go. This was almost perfect. Got up there, tiny bit above it, started down, had a good decline. Now we're going back up again. Where does that leave us? Well, let's take a look at our daily bar projections and go down to a lower level. Well, let's look at this level right here, and I'll try to explain you what I mean by loop projections. So this was the all-time high right here. It occurred on January 22nd, a reading of 3337.77. What happened at that point was the offset line, which had been coming up, and again, this reflects the all-time high several days earlier, started down again. So it looped down, and now it has begun to loop up again. Within that loop, we have the real-time prices coming down and looping up. So that would allow, as you can see, try to visualize this getting above the offsets, the loop in real-time prices getting above this loop down and giving us higher offsets. In fact, you can visualize quickly that, let's say this is about the halfway point here, 1.5, 2.5, and if you go up 2.5 more bars from there, you're already way up into this territory up here, so you can get to new highs. And then at that point, visualize that you come down again, form another loop with the offset line, form loop with prices, and loop back up again. And this whole sequence could go on ad infinitum, not just with this single offset, but with even longer offsets after a while. So that's what I mean by the fact that you can't be guaranteed when you reach a very long-term upside projection or downside projection, if you're looking on the downside, that no lower or higher projections will be given. You can get these loop projections, shorter term cycles that are showing you, okay, we come down, but we're going up again to even higher highs. So as you can see, we don't have any higher projections on this particular offset, but we sure are close. And if the S&P holds up for another 2 days here, then you're going to get projections up to new all-time highs. Okay. Before I show you the New York Composite projections, let's take a look at a technical chart for the day. I like to look at those, as you know. And this one is on an 81-minute bar chart. This happens to be the Russell 2000 future. But the reason I like it is there's a line that has been quite important since the beginning of the year. If you take, again, this is the Russell 2000, daytime only, no Globex in here. If you take the high on January 2nd and put it through the high of January 9th, look what happened. You broke easily above it, came down to it, tried to hold another little rally, then you broke decisively below it. This was the big rally the other day, and as you can see, we came back exactly to the line. A big decline from there, and now 2 gaps up in a row, and guess where it stopped? Exactly at that line. So this is one thing to watch for follow through tomorrow. If we're going to go higher, we have to get above that line. For those of you that follow the Russell 2000. That price is right around 1662, and it goes down during the day. But on an 81-minute chart, there are only 5 bars to the day. So 1, 2, 3, 4, 5. By the end of the day, that line will be at 1661 or 62, let's say. So if we get above this line, chances are very good that higher projections are being given. But also, I wanted to point out to you what a great resistance line this has been. Once they broke above and came back down below, they stopped there. 2 bars stopped there almost exactly today. Okay, let's go to the New York Composite Index closing price projections. Before I do that, one more technical chart. This is actually a cycle chart. It's a pattern, cyclic pattern. George Lindsay, very famous psychoanalyst going back, a few decades. I think he probably died around 1990, maybe into the 1990s. Brilliant guy, brilliant cycle man. But he talked about bottom to top counts in the market and said that almost all important tops have a certain bottom to top count that leads up to that top. Even short-term ones, long-term ones, intermediate-term ones. So anytime I see a potential bottom to top count, I like to make note of it. And here's one right here. It's not exact, but let me show you what it is. These red lines here on a closing price chart are 278 trading days apart. Now, there are 252 trading days in a year. So as you can see, there's more than a year's separation of them. This is a long-term pattern. Here's a bottom, bottom to bottom. Today, exactly the same number of trading days away, we reached up into this area. Is that going to be a top? Well, at least you have an excuse for saying, hey, maybe you're at a top now. And the other thing I want to point out is I did cheat by 1 day back here because the actual closing low came on November 14th of 17 and, November 15th, and I put the line on November 14th, so 1 day away. But look at this, very nice bottom to potential top. Just wanted to show you that. And if we turn down from here, we'll look back at it and say, hey, that was a great call by the bottom to top Lindsay thing. Okay, next. Okay, when we get into a situation like this, where the market is rallying back after a good-sized decline, the question becomes, where does that rally back stop? Could this have been the day today? We had 2 nice days to the upside now, and look where we are. Look how close this is here. I know these offset lines, because they're exacting, get a little complicated because they have tails on them. But as you can see, the projection software, indeed, which works to the letter, there's no fudging back and forth and say, well, but it just got over it. It did get over the offset lines, and it gave a projection almost back to the old highs on the New York Composite Index. But the point I want to make is, look how close this is. We can easily turn down tomorrow in this area right in here. This would be tomorrow's price in here, and show that indeed that was not really a sufficient enough break to cause the market to generate high confidence upside projections. Nonetheless, the projection has been given, but it's really so close that I don't say it's been given with a lot of confidence. So there's no guarantee there, or I shouldn't say guarantee, there's no high confidence that a move higher is going to be seen. Let's look at the next chart, see if there's any clue there. Well, look at this. No crossing of the lines there, so certainly no projections to the upside there on the New York Composite Index. And again, remember, that is our most consistently accurate projection generator. We go to the very next one. Same thing here. Now you can see this downside was met very nicely, and we've now started up. The logical consequence of meeting the downside projection. The next longer one, this is the tricky one we showed you the other day. If you want to take this one, split hairs on it and say, hey, you never met this projection, and you didn't. It came really close. I mean, good enough for excuse the expression, military work, but you didn't make that. So this theoretically is still calling for a move down to this level on the New York Composite Index. There are so many things to look at when the market starts this little down up thing. So many things to look at, and you'll have the chance to do that when you have this projection software in your hands. You're just going to be so, if you do market work at all, you'll be so excited and thrilled by the things that you can do. Okay, the final thing we're going to show you is, let's go to the 30-minute cash charts. We don't very often show you those. We show the 27-minute futures charts, but the 30-minute cash charts are a thing of interest themselves. This one is, I believe, the shortest term S&P, the shortest term offset. And as you can see, there's actually not that much to see here. You had almost a perfect projection down at the bottom here. You started a rally off that, and then if we go to our next longer offset, we see that, look at this. We got a projection right at the end of the day going into today's market action that called for 3288.27 to 3308.37. What was the high today? 3305.65, right within a couple of points of that projection. So we got up to that projection. Did that give higher projections? Let's take a look. This would be the next longer offset. Indeed it did, but look what it called for. The high here was 3304.26. As we told you, the high for the day was 3306.92. So right at the top end of here, we started to come down too. How about the next longer offset? This one is calling for significantly higher prices, in fact, to new all-time highs. But let me point out something to you here. This is important because although this is kind of quasi-scientific, these projections, they're not, I hesitate to say that they are strictly scientific because there is some interpretation involved. And in this particular case, I want to show you how this projection was derived. Here's the low right here, okay? We had a quick rally and then a sideways move and then a move above both the projection lines. That's what gave this projection window way up here. But let me show you something. Look at this area down in here. I've got an oval around it, and I'll try to expand it for you so you can see it more clearly. See what happened here? Look how close this was. If this line, the dark blue line, were not even another full move to the right, a full bar to the right, you would have crossed that line down in this area somewhere, and that would have given you a projection up to, what, from a half here to 1, 2, to another 1, 2, maybe a half up here. You would have met this projection already too. So this projection has to be respected. But rather than blindly following it, be aware of what it comes from. The crossing of this line moved over before it made the full crossing. So what would have happened, for example, if it had crossed the dark blue line right here and then gone over and crossed both of them above there? That's the tricky part. And a lot of times what you do in a situation like that is you will average the move from the crossing here and the crossing further up if you get dual crossings with the same offset. I don't want to get too complicated with you. I just want to show you how this involves brain work too. It's not just, oh, duh, we have a higher projection. Look at that. Yes, indeed, on a technical, strictly formal basis, these projections are outstanding. But I want to show you that you can make an argument that you would not have gotten projections that high had this been over just a fraction. The dark blue line right here, been over just another fraction. This line that goes between the medians of the bars would have crossed at a much lower level. Okay, hopefully we've given you some kind of setup here. We're getting into a time period that's quite important intraday, so there may well be some intraday updates. I won't promise you that, but if I see something worthy of note, I will not hesitate to do an intraday update. The only way you'll know about that is if you go to the bottom right of your screen, subscribe to this channel, and once you subscribe, click on the bell. If you do that, give your email address. Anytime there is a new update, you will be notified of it. Thanks a lot for watching. Please, we still welcome comments. Hopefully they're good ones or constructive ones. But if there's something you don't like, let us know also. We'd appreciate a thumbs up if that's what you want to give us. Until then, or until tomorrow, thanks for watching.